Hey, what's up? This is George. Hey, real quick, I wanted to make a quick comment about rental pricing. Right now in Southern California, I think we're seeing artificially high rents. We're seeing a lot of apartment complexes that are giving, zero off your first month, half rent off your first month, and we're seeing a lot of signs go up on housing for rent, but we're not seeing the prices align with what's happening with the dramatic collapse in real estate prices. In Southern California, you're seeing a collapse in real estate prices. I mean, a lot of times you're seeing 30, 40, 50% drop in the real estate prices. That hasn't translated yet to the rental prices yet, as far as I've seen. What you're seeing is out here, 3-bedroom, 2-bath, $1,400, $1,500, $1,600 a month. And the reason why I think you're seeing that type of strength in the rental market is you have a lot of people being foreclosed upon, and they're pouring into the rental market. That's keeping the rental market artificially strong right now, is that influx of people that have lost their homes and that are trying to sustain themselves in a rental. That isn't going to last forever, guys. Once that's over, and these people have been purged of the market, rental prices are going to follow the same situation that real estate prices are. So if you're buying property to rent out right now, you have to realize you can't go on the current rental income prices. You're going to have to look at a discount of 20, 30, 40% in rental incomes, because rents follow what people have to pay in mortgages for their houses. It's just common sense. And what you're seeing here in Southern California is a huge amount of properties, inventory that isn't even showing up on the MLS, that isn't showing up in the newspaper, it's not showing up on Craigslist. They're being held off the market artificially, and those are the bank-owned properties. There's like a huge tsunami of properties are being held off the market, and that's keeping the inventory somewhat tight. So any sales numbers you're seeing that are somewhat positive or are not as negative as you would think, they're not calculating the huge amount of houses that are being kept off the market. When those start to trickle, when all these bailouts and stimuluses and all this stuff plays itself out, and those properties are dumped into the marketplace, you're going to see a whole new wave of foreclosures. You're going to see a whole new wave of downward pressure on real estate prices. So if you think we're hitting a bottom right now in real estate, like I said before, I think we got 20, 30% more to go in real estate. And with that, it's going to drag the rental income. So all you guys that have some sort of income, rents are going to come down. This isn't really the time to rent. It's really a horrible time. It's not really the time to buy. It's really not the time to rent. It's the time to just kind of try to find cheap digs. I mean, that's basically it. If you can find something cheap to rent, then that's probably the best of both worlds, because you're not going to see asset depreciation by buying a house. And there are a few people out there that know how to find really good deals, but those are usually professional investors. They're buying 2,000, 3,000 square feet homes in Moreno Valley for 50, 60,000, but they're turning them, they're fixing them up and turning them for like 160, 175. The normal person isn't going to be able to do that. So everyone trying to play real estate investor, this isn't the time. I mean, the time to play real estate investor is when GDP is expanding, jobs are expanding, small businesses are expanding. As the economy stagnates, and that's what we're going to see, a stagnation or worse effect, you're going to see rental prices decrease. You're going to see housing prices decrease. The future of housing won't be an investment. The future of housing will be a place to lay your head.